The coronavirus outbreak is having a major impact, we know, on the tech sector. Three of the biggest names, Apple, Google, and Microsoft, are bouncing back this morning, but they have been hammered, down about 5% over the last 5 days. Wedbush analyst Dan Ives is back with us, along with tech editor Dan Howley. Good morning, guys. Dan, you brought with you some names in tech you should own despite the coronavirus. And one of them is Apple, which is interesting to me because of their exposure to China, and they're such a global company. Make the case for Apple.
I mean, to me, it comes down to the math. 350 million of 925 million iPhones worldwide are in a window of an upgrade opportunity in the next 12 to 18 months. Now, does that get pushed? Does it get tweaked? But it doesn't change, going to a 5G supercycle. So to me, you combine that with what's going to be a $60 billion annual services business that I believe is worth about $600 billion. That's what I view as a golden name to own now in terms of Apple. Is there scary days ahead with supply chain, China demand? No doubt. But I've always continued to view as a forest for the tree type of name. And I think you just look at the pure going into a 5G supercycle, that math doesn't lie.
Dan, I'm going off script here. Tesla. You follow Tesla like a hawk. In my view, very much a tech company. How bad will their first quarter look like? And what do you need to see for that stock to start working again?
Yeah, so I think that's a good example. Like first quarter is not going to be pretty, especially in China. Even some Europe slowdown that could be there, just given what we're seeing. But Tesla's a name that you're, from an EV perspective, just like 5G for Apple, you're looking at over the next 12, 18, 2 years, 3 years. Can they get to 100,000 Chinese units in the first year? I believe that's something that obviously is going to be a stretch, but ultimately I think that's 4 to 5x the U.S. market in terms of the opportunity. So I think it's a good example of the street, what you're going to start to see now. Street's going to look past March, look at normalized June, September, look at 2021 numbers. If you believe 2021 numbers stay the same, with both hands, you're buying names.
So, I mean, Dan, the coronavirus is not causing a systemic issue or failure within tech, right? So, I mean, would you agree with Dan and sort of take this rosier, longer-term outlook for tech?
Yeah, I mean, especially Apple, just because, okay, so all three of them, really, right? Microsoft is only being hit really because of the market sell-off, as well as Google. Microsoft's exposure to China is based on its Surface line and its OEM activity with regards to Windows 10. That will all come out in the wash, right? Specifically with Apple, they have people locked into their ecosystems. People aren't going to go, okay, if I can't get access to an iPhone right now, I'm going to go watch. You have AirPods, you have Apple TV or Apple Music. You're just going to wait until the next iPhone is available. And whether that's the 11 later in the second half of the year or the 12 when it comes out, or whatever Apple ends up calling it, you will go with that. With Microsoft, you're just going to wait until there's availability for those laptops or desktops. You go with those devices because you know what Windows has to offer. And generally, look, they're cheaper than what Apple has to offer. And if you're a big Windows fan, then you go for the Surface line. And chances are, if you're a Surface fan, you're not going to pick up an Apple.
You're saying if loyalty is there regardless of how long this thing lasts. What about, you had on your list of names you have to own right now, Dan, you said Uber. Why Uber? Because gig economy in a situation like this with the virus, we're seeing gig economy getting squeezed right now.
No doubt. And AB5 obviously is an issue in California, just legislation across the board. But that's one, right now it's 3% penetrated in terms of ride sharing. So it just speaks to the themes, the secular ones. Profitability obviously going to be pushed forward a year, as Dara talked about. And that's why to me it's cloud, Microsoft, 5G, Apple, EV, Tesla. Transportation, pick your spot, Uber or Lyft. Cybersecurity, we look at names like Zscaler or CyberArk, Varonis. So to me, that's why I think these are the times as an investor, if you got cash and you're willing to sort of navigate through risk, white knuckles, I think you look at the secular themes over the next 2, 3, 4, 5 years, pick your winners, and that's how we've navigated these exogenous events over the last 20 years.
Do you think that the virus, though, can push that timeline of profitability for Uber back even further?
Look, I don't believe it, because ultimately they're just going to have to cut more costs. In other words, once they put that bogey up there, and I think that's why Dara tried to stress that, at investor meetings, to be like, we're going to hit that, although it's a guilty till proven innocent. Remember, a lot of these stocks are going to be guilty till proven innocent until more news comes out.
But you know what? Uber and Lyft, they have not experienced a recession. Do you think they have enough cash to survive, let's say, a mild recession?
Well, I think you do raise a good point. A lot of these business models, if you hit a recession, even if it's small, they have not been through it. So I think those questions, can you stress test those models? I think they have enough cash. Ultimately, they would have to cut costs. And hypothetically, if you went into that type of environment for Uber Eats, they would have to significantly rationalize even more, potentially sell off.
Dan, keep taking those Uber rides. They're going to need your cash, baby.
That's the thing. I don't think people are going to stop using Uber or Lyft. There might be a few that just decide, oh, it's a little risky,
pricey.
but people are still going to use that. And once this is all clear, they'll go right back to it.
Yeah, and it goes back to if you're Armageddon and you're stocking up tuna fish in the basement, you're not buying growth stock. So it just speaks to where we sort of, in my view, in terms of it's a short-term shock, although tragic in terms of corona outbreak, from a stock perspective, look at the winners.
No tuna fish for me, just after the gym. All right, we'll leave it there, guys. Dan Ives, Dan Howley, thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.